everybody. Welcome back to our Business and Taxes series. Thanks for taking the time to drag yourself away from the election marathon. I don't know if you guys are like me, but like I'm addicted to it. And I'm like literally yesterday I was telling my husband, I'm like, okay, so I watched this the whole day and there was like no new information, yet they talked, like what are they talking about the whole day? Like what do they have to talk about? So anyway, I've decided this morning that, taxes are usually not very fun. But, I mean, the election marathon has been slightly exciting, but really, like, not that fun in a lot of ways. So, I'm thinking that today's topic, especially, because we're going to talk about saving, deductions are going to save you money, I'm thinking it might be just slightly more exciting than the election. But I'll let you guys be the judge of that. So I'm Ann Lobos with North Star Consulting and Tax. So, I'm a CPA. New business owner, just like you. My business has only been around for about 2 years, but I've been in this industry for like 20 years. So, I've been around the block a little bit. Seen a lot of businesses and seen a lot of ways that they're not taking advantage of saving taxes. So that's why we created the series, was really to help you understand your taxes and know how to save them, because nobody wants to pay more in taxes than they have to.
Yep. I'm Sam Jones. I'm a financial planner at Vitality Capital Management, and I'm a new business owner as well. And today we're going to talk to you about how you can save money through deductions in your business. And so first off, you have your revenue for your business, you minus out any business expenses, and that's where you get your net income, and that's your taxable income. So how a deduction works, say for example, there's a plumber, he has a job, it's a big job, he has $10,000 worth of business expenses. So if he takes a business deduction on those expenses, he can save up to 22%, say he's in the 22% bracket, save up to 22% on federal taxes, 5% on state here in Utah, and then 15% in Social Security tax. So he could save up to $47, I believe, or $4,400 in taxes, which is huge by taking this deduction. And I think really it's important to realize in business and in tax planning, it's the small things that add up over time that save you the money. There's no big silver bullet when it comes to tax planning that's going to save you a ton. But it's just little things done over time that save you that money.
Yeah.
I did want to throw out a quick disclaimer too. This video is for educational purposes only, and it's not meant to be tax advice or legal advice. You should seek a professional advice for any advice that you may need.
Great. Insurance company's happy with that disclaimer, so let's get going. Okay, so one of the benefits of being a business owner is that you can take expenses that you probably would pay for anyway, and you can kind of justify those as business expenses. So I want to kind of tell you a little bit of a story. It was last year I was talking to a guy he's a founder of a nonprofit that I love, so I was kind of helping him out, giving him a little bit more free advice than I would normally give people. So we were walking through as he was doing on TurboTax, so we were screen sharing, we were walking through his taxes, because he calls me up and he says, Ann, I owe $2,000 and I don't have $2,000. I just started this nonprofit, I have no money. So I'm like, all right, let's take a look and see what we do. And so a lot of these deductions that we're going to talk about today are deductions that he missed. So he started out owing $2,000, and we kind of walked through it, and I was asking him questions about, did you do this? Did you have this? By the end of it, we got down to where he only owed about $400. He still owed money, but way better than $2,000. So let's talk about some of those deductions that you can take that might be personal, but you can kind of justify those. So one of the big ones is vacation. So if you are making sure that you have a business purpose for that vacation, and of course if the IRS ever came and asked you, of course, the sole purpose of this trip was vacation. I did not want any pleasure out of it, right? But so vacation can sometimes be one of those areas where you can get away with some stuff. So in his case, as I was asking him, well, did you go to any conferences? And like, oh yeah, my wife and I, we went to this conference here, and we had to we had to pay for a hotel, we had to rent a car, we had to fly out there, and I'm like, boom, deduction. We're putting it on there because that was a business purpose. I'm not saying that you didn't have fun there, right? Because you're hanging out with your honey, so it's going to be fun still, right? But business purpose, so we put that on there. So vacation's one of those conferences, trips, right? Just pick a fun place. Like, I know we joked in the last place I worked at, they were always wanting to do like a Hawaii cruise where the main purpose for accountants would be they were going there to get their 40 hours of education they have to get, right? But Hawaii, right? So conferences and trips, go pick a fun place you want to go and hang out, and find a conference there that you want to go to. Education kind of stuff, and it could be like you take a class at the college and you're not there for a degree, right? And I've done that all the time over the years. I've taken a bunch of classes that I write off for my business because I took it for business purposes, right? And like my Audible subscription, I have a Kindle subscription, and I don't have time to, listen to books for pleasure. So these are all business development, personal development books, and boom, that is a deduction. So one of those, like Sam mentioned, those little tiny ones that when you kind of combine them all together, they end up to be, pretty good deductions there.
Totally.
So I think the IRS's rule of a business deduction is that it's reasonable and necessary. So you can see there's a lot of latitude there, right? Yeah. So one of the ones that I see people miss a lot are car deductions. Now, the car one can get a little bit tricky. Like if you're using your car more than 50% for business, you can get a better deduction versus if you're not. But the point I want to make here is to track that mileage, because when I was tracking mine last year and I went and looked to see how much I'd spend at driving for business, because we have another car that we use as a family car, so we don't really drive my car much for, to go on family outings. I was using my car like 90% for business. So track those miles, because I think you'll be surprised at, how much that will add up. So.
Yeah, and then another deduction that we see that's commonly missed is a home office. Especially with COVID, if you have a home office that you're working at, there's a potential that you could have a business deduction for that. And it has to be used regularly and exclusively for business, and there's some certain rules around that, but it's a huge benefit where you could get an awesome deduction for that. And as well, a cell phone. I recently purchased a cell phone, and not only was I able to write off my cell phone for the purchase price of the phone, but also my monthly bill that I pay every month for my cell phone service. Yeah,
because probably a lot of you like me, I don't have a business phone, I just have a cell phone. So how is that not a business deduction? People need to call me for my business, right?
Totally.
So, and then home internet. A lot of times people might think this is attached to a home office deduction, but I don't do it that way. Like, even if you're not writing off a home office deduction, like you still need internet, for your, your phone and to get on your laptop and stuff. So that one is one. Health insurance. I see a lot of people miss this, but there's a special deduction if you have self-employed health insurance. So make sure that you kind of are tracking that, and make sure you tell your accountant that you have, health insurance.
Yeah. And I think another big one that I see a lot of people miss is software. Software expenses that are related to your business. I was talking to a photographer the other day, and she has a website and a bunch of different editing software that she uses to edit the photos that she takes for her business. And she wasn't deducting any of that. And so there's this huge potential savings there through all the different softwares that you use that are related to your business.
Yeah, so that's a good one. One of those ones that little ones add up to a lot. Yep. And then travel, like we talked about conferences and, business related trips. So travel's one that I see a lot of people miss.
Another one that you could look at is if you set up a retirement plan in the first year of having a business, there's a good chance that you can get a credit for that.
Yeah. So one of the points I want to make too that I wanted to make earlier but I forgot was the more you know, the more you're going to be able to deduct. And this is not to say that your accountant sucks, because a lot of them are really out there trying to save you money on taxes. Some of them don't care, but a lot of them are out there trying to save you money. And speaking from personal experience, we can't ask you every single question about your life. So like if you know that I can get a home office deduction, or I just started a retirement plan this year and I can get a retirement plan credit, or my kid is going to start college next year, let me just bring that up because I know that that's going to lead to some credits in the future, right? The more that you are aware of like these kinds of deductions, like you can bring those up and your accountant will appreciate that, because they'll be like, oh my gosh, this person kind of knows what they're talking about. And like in a way, like they might even be a little bit more proactive in like, kind of helping you save money and really kind of finding you deductions, because they're like, they get excited about people that are like interested in like
So other things we want to talk about is work clothing and.
Oh yeah, I forgot. So some things you can't deduct. So I get a lot of people that come in and like, I paid to wrap my car last year, right? So doesn't that mean that it's like entirely business? And the IRS doesn't like that. You can pay for the cost of the wrap to put it on there, and if it's someone else's car and you're paying them to drive it around, because I've heard of that, you can deduct that, but that does not automatically make your car a business car. Like, you still have to track your mileage and figure out like how much mileage you're actually legitimately driving to business stuff. The other one I hear a lot is work clothing. People are like, oh, I had to buy all these business suits. Well, that's kind of too. The IRS, they only let you deduct clothing if it's something that you can only wear to work. So even like a yoga instructor that buys kind of yoga clothes, yeah, you can kind of wear those some other places too, right? So those probably wouldn't fly. However, they do have this caveat if you put your logo on it. So if you want to put your logo on your suit, then you can probably get away with deducting it.
So follow-up question for you on business miles. What like qualifies? Is that like driving to work, like into your office, or what exactly?
No. So if you're a business, even if you're a business owner that you have an office that you go to, like that's considered commuting miles. So that is not a business. That's a great question. That is not a business mile. Now, if you're at home, if you have a home office, then obviously that's your home and you're not driving anywhere. So any other places you're driving would be considered business mileage. You go to a networking event, that's business mileage. You drive over to Office Max to buy a printer. I mean, that's office mileage. So.
Yeah. And so those are a lot of the common deductions that we see. And if you have questions, you can always schedule a free tax analysis with us, and we'll be able to review specifically with your business what deductions you might be able to take advantage of. We'll include a link in the video in the show notes. But a lot of times when I talk to small business owners too, the reason they started a business was for profit, right? They wanted to have some sort of financial freedom through starting their business, and typically the other reason is they're passionate about the work that they do and they want to make a difference. But a lot of times you'll see where people will take certain deductions and it won't actually be in their best interest as a business owner and in reaching their long-term goals. So I shared the example earlier of the plumber who has a business expense and he's able to deduct a ton of money and save money. But a lot of times we'll see where someone, for example, say that same plumber has a bunch of income at the end of the year and he wants to go out and buy a truck. Well, it may not make sense because he may be sacrificing at expense of his other goals. And you don't want to let the tax dog or the tax tail wag. How do you say that? The tax tail wag the dog.
Don't let the tax tail wag the dog. Which really just means like, because I get this all the time. People are like, they'll call me up at the end of the year and they're like, I have all this income, how do I get that down? Should I go buy a truck? And I'm like, well, do you need a truck? No. Then don't go buy a truck. Because like you're going to go spend 30, probably maybe even 60. I've seen people spend $60,000 to $70,000 on a truck. And you're not going to save $60,000 to $70,000 in taxes. You're going to save, as Sam mentioned, whatever tax bracket you're in, you're going to save that much in, like, you go buy a $30,000 truck, you may only save like $6,000, right? So wouldn't you rather have that cash for something else to be spending either on, long-term equipment that you're going to really need in your business, or to meet those long-term goals that you're trying to, meet in your life. So
yeah, it's important to understand the long-term goals that you have. You don't want to sacrifice and buy this truck and sacrifice, maybe helping to pay for kids' education or your retirement goals or taking your family on vacation every year. There's oftentimes a lot of other tax benefits that you can get for saving retirement and college education and things like that. So it doesn't always make sense to sacrifice at the expense of your long-term goals.
And I get a lot of people that will, at the end of the year, they'll send me their stuff and be like, oh, I had a loss in my business. It's almost like this excitement. I had a loss. And I'm like, wait on. Okay, don't you realize that like if you legitimately lost money, like you could have literally not worked the entire year and you would have been better off. And I'm pretty sure, speaking from personal experience, that all that time you spent in your business thinking about marketing and sales, you could have found some better use of that time that would have been a lot more enjoyable. So.
Yep, definitely. So it's important to not only understand these deductions as a business owner, but also to balance them with your life goals.
Yeah, and so like Sam mentioned, our goal of our business is profit. And so when people come to me and they're freaking out about the money that they're gonna have to pay on taxes, to me, this is not a tax problem, this is a cash management problem, which is what we're gonna talk about in our next video, is how to manage your cash so that you, one, are meeting your profit goals, and two, you're having that tax money saved as you're going along, so you're not getting to the end of the year freaked out because you don't have your tax money saved and you're thinking about going and buying a truck you don't need, right?
Yep. Well, hopefully you got a lot from part 3 of our 4-part series. Tune in next week for the last video of our 4-part series.
Thanks.